I'm Rick Kaler. Thanks for joining me. Knowing how long you may live is an important variable to consider in putting together a successful retirement plan. Many online sites can give you a scientific estimate of your life expectancy. One that I recommend is livingto100.com. That's livingto100.com. When I retook the evaluation recently, I was surprised that my life expectancy had increased from age 93 to age 98. But in an instant, I related to one of the greatest fears of older Americans: outliving your sources of income. The greatest financial risk for depleting retirement resources isn't investment returns or necessarily overspending, but it's an unexpected and lengthy stay in a long-term nursing home or long-term stay in an assisted living center. So it's not surprising that one question I hear often is, what do you think about long-term care insurance? Well, long-term care insurance is a difficult product to analyze and make any recommendation on. It's existed for some 40 years, but the industry always seems to exist in a continual state of disarray. Things like lower interest rates, lower lapse rates, rising longevity have all driven premiums high enough that the sales of insurance have actually declined 70% from their high in 2002. Exacerbating this problem is that most long-term care insurance companies issued policies with guaranteed premiums. According to a report by Michael Kitces at kitces.com, just a small variation in actuarial assumptions can have a significant impact on premiums. He says it's estimated that as little as a 1% change in interest rates correlates to a 15% required change in premiums to keep a long-term insurance policy actuarially sound. When you look at where interest rates were back in the 80s, say at 10%, and today they're as low as 1%, that's a huge impact. Additional to this, having a 1% lapse rate instead of, say, a projected 5% lapse rate can increase future claims for an insurer by as much as 50%. So as a result, Kitces notes that long-term care insurance providers have really struggled to be profitable. In some cases, companies were unable to honor their original pricing and had to request permission from state insurance departments to increase premiums on existing policies by as much as 85%. Premiums for new policies, well, they've gone even higher. Simply stated, a guaranteed premium long-term care policy needs to be priced high enough to provide a cushion against these variables, or the company may be unable to regain profitability with rate increases later. So how do we address this? Well, one way is to eliminate any aspect of a guaranteed premium and make long-term care insurance premiums more flexible. One flexible premium policy that I've looked at envisions paying dividends similar to a participating life insurance policy issued by a mutual insurance company. Mutual insurance company is owned by the policyholders. Kitces notes to the extent that future claims or the insurance company's investment returns turn out to be better than the original projections, which are typically more conservative, the excess results will be returned to the policy owner in the form of either an insurance credit or an interest credit, and those would help reduce future premiums. One such policy is currently priced 20 to 30% under traditionally priced policies with the guaranteed premiums. Naturally, there's no guarantee a flexible premium policy will end up costing less than the traditional policy with a guaranteed premium. Probably the biggest concern is the conflict of interest a shareholder-owned company will face in deliberately refunding any savings in form of dividends to the policy owners. This conflict, as I said, doesn't exist with a mutual insurance company where the owners of the company are the policy holders. But still, the potential benefits look interesting enough that taking a hard look at a flexible premium long-term care insurance policy makes sense. Long-term health care is one of the aspects of aging that most of us don't want to think about, but many of us are going to need. While long-term care insurance isn't for everyone, considering it is a worthwhile part of financial planning for retirement. Thanks for joining me.